I just saw this new plan, Commerzbank 5.0, and I thought maybe there were aspects of it that you didn't approve of. Maybe you said, all right, if they're going to go this path, I'm going to choose another.
Commerzbank 5.0 is something that we have developed over the last month altogether. I think we have about 14 or 15 offsites on board level to begin with. It is soberingly realistic, one has to say, but it is not the first time that Commerz is taking decisions probably a little bit earlier than the rest of the market. We've been the first ones to exit prop trading. We have rebuilt IB very early. We have exited chips very early. We've sold AMC when not everybody believed that to be a good idea. So I think in the sense of, yes, it's self-help and it is self-finance with a very realistic assumption on interest rates and the environment. It may look not very fantastic or very optimistic, but again, it's realistic. The German economy, which still has a very strong industrial base, is still on the right track. And then said in that sense, I think for a lot of people, it is a kind of first time in their work history that they are seeing a growth being a little bit slower. And again, we are not even talking about a recession right now. So I think that makes the discussion probably a little bit more hectic than it should be.
Don't you see a recession coming in Germany?
I think what we definitely see is slower growth. Whether we go through 1 or 2 quarters of technical recession remains to be seen. And again, this depends on a lot of other factors. Just take the US-China trade conflicts and other stuff, which is going back and forth and has a lot of volatility even on a Twitter-to-Twitter base, so to speak. Yeah. But back to Germany, I think if you look at the latest political decisions also on climate, on the climate package, yes, you can debate whether there should have been more and blah, blah, blah. This is always the case. But I think this is a clear first sign that there also is invest activity of the government.
So slower growth we see in the bigger picture at Commerzbank as well. I mean, previously you wanted to grow, I think, 3% a year. Is that still your target?
The base model still has to be in a world where your revenues shrink but just by the interest rate environment more or less automatically. You still need to focus from our point of view on growing both customers and with the customers' assets, because finally more assets will produce more revenue. And you will need a good part of more assets and more revenue to compensate for the effects of the negative interest rate environment. So in that sense, yes, growth on customers and assets is still a clear part of the strategy. It will be, let's be honest, a little bit more focused on 2 things. One is we probably are not going to be too keen on deposit growth. So the focus will probably more be assets like loans or securities. And secondly, we will redirect parts of our invest in net new customer growth into making more efforts, increasing our work on the existing customer base. But basically, it is still a growth case, both in retail or in private clients, as well as in corporate clients.
You talk about deposit growth, you're not too keen on that. The reason is obvious. Are you going to be passing on negative interest rates to your retail clients?
For the broad retail clients, I think this is not a discussion that anybody really is having realistically. We will have similar like to what we have been doing in corporate clients very successfully over the years. We have we'll have focused discussions above certain thresholds, but again, they are far away from what the normal classical retail client would look at.
Will you have a profit in 2020?
This is the crystal ball part now. That will depend.
We're only a few months away.
Yeah, we're only a few months away, yeah. No, that will depend obviously on when and how and to what extent we agree on the restructuring and whether we book it in 1 piece or in 2 pieces. So there's a lot of bits and pieces still to play with.